The backdoor Roth IRA is one of the best strategies to build tax-free wealth over the long haul. Now, a lot of people misunderstand this. They think, I'm high income, I can't do a Roth IRA, Matt. Or they think, is this really a legit strategy? Well, in today's video, I'm going to break down the backdoor Roth IRA, how it works for 2025, and the rules you need to know to implement this so you can be looking forward to a tax-free stream of income in retirement. I'm Matt Sorensen. Let's build wealth. Now, I want to make sure you understand what the backdoor Roth IRA is. What this is it's a way to get $7,000 a year into a Roth IRA. No matter how much income you make, no matter the phase outs for Roth IRAs, no matter whether you've maxed out your 401k, you can put $7,000 in a year. If you're 50 or older, you can put $8,000 in a year. What a backdoor Roth IRA is three different things. It's a traditional IRA that you make a non-deductible contribution to every year, let's say $7,000. It is also a Roth IRA. And what you're going to do is you're going to convert the $7,000 non-deductible contribution over to the Roth IRA. See, this is a loophole. What Congress did is they had a cap on Roth IRAs based on how much money you made. And generally the idea was if you're a wealthy person, we don't want you using these Roth IRA accounts that grow and come out entirely tax-free. We don't like that. This is meant for middle class and lower income taxpayers. We want them to have this strategy, but there's a loophole in the rules. And what the loophole is they removed the income limit on Roth conversions. And they said you can convert to Roth at any income level. We don't care. So the strategy of the backdoor Roth IRA, which has been around for 10 plus years now. You can do it at our company directed IRA. You can do it at Fidelity. Any savvy financial advisor knows this strategy. It's been around. It's tested. I don't want to make you feel weird about it just because it's got a name like backdoor Roth IRA, but it is a legit strategy. I use it. Thousands of our clients have used this strategy over the last decade. It is a viable way to get Roth IRA dollars even if you're high income. So you got those two pieces. I got a traditional IRA. I make my non-deductible contribution. I've got my Roth IRA account. And then the third piece is the Roth conversion. So that $7,000 you put in every year, you are going to convert over to the Roth account. At the end of the day, that traditional IRA holds $0 in it. Now you might keep it open because you're going to do this next year and then convert it over. And you've got to do that two-step process. This is, those three steps, the backdoor Roth IRA. Now, there are a couple of snags in the backdoor Roth IRA if you don't know what you're doing. The first is something called the Pro-Rata rule. If you have traditional IRA funds already that are deductible, regular traditional dollars, you took a tax deduction in when you put them in, or maybe it was traditional 401k dollars, you took a tax deduction when you put them in, and now you've rolled them to an IRA. In either of those scenarios, if you have those traditional deductible IRA dollars, you must convert those pro rata to when you're converting this non-deductible contribution. What this means is you have to convert your other traditional IRA dollars. So most people that do the backdoor Roth IRA don't have a traditional IRA, or they first convert the traditional IRA that has deductible dollars. Now, if you have traditional 401k dollars, even a solo 401k with traditional dollars, those you don't have to take into account. Those traditional dollars can stay. It's just traditional IRA dollars or even SEP IRA dollars that you must convert first fully before doing the backdoor Roth IRA. Now you can do the pro rata thing here, but I'm just telling you that's messy. In general, my rule of thumb is just convert the deductible dollars first, then come over to the backdoor Roth IRA strategy. Now, one thing for 2025, I want to make sure you understand is the backdoor Roth IRA is still alive and well. There was efforts in 2023 and 2024 to close the loophole. That legislation all failed. Stuff and Build Back Better, that all failed. So the backdoor Roth IRA is still out there. You can still do this for 2025. The other thing I want to let you know right now, sitting here in March of 2025, is you can do $7,000 a year, but you can do it twice. You can do it for 2024. If you haven't done this strategy before, you still have until April 15th of 2025 to do your 2024 contribution. So combined, I can put $14,000 in non-deductible contributions into my traditional IRA and then convert them over to the Roth IRA. So now I've got $14,000 in the Roth IRA. And if you have a spouse, they can do the same thing too. They can double dip on this also, so they can have $14,000 in their backdoor Roth IRA. Between the two of you, you could have $28,000 sitting in Roth accounts, now growing and coming out totally tax-free at retirement. Now, I do want to point out a couple of things when you're actually executing on this, okay? You're doing the paperwork to do the backdoor Roth IRA. Now, at our company directed IRA, we have it in one package. We know what it is. We execute it for you. We make the steps easy. A lot of other places, even me before I had my own company doing this, I was doing this at brokerage IRAs, and I'm just telling you, they screw it up a lot. Even my daughter was doing the backdoor Roth IRA with the large broker dealer, and they jacked it up. Here's what they do wrong. When you call them to say, hey, I put this money in a traditional IRA, I want to convert it to Roth, they think, oh, did you just put the money in the wrong account? Maybe you set up the wrong account. We're just going to move it over to the Roth IRA and make it as a Roth contribution. We're going to recharacterize that as a Roth contribution. contribution. So you need to be very clear that you are not wanting to recharacterize the contribution. You are wanting to convert it over to a Roth IRA. So make sure that actual form and request you're filing and completing with your institution is a Roth conversion form. Do not sign a recharacterization form. You will be screwed. It's very hard to unwind that and get that fixed. Make sure you're getting the Roth conversion form. Now, one other nuance to the backdoor Roth IRA is I'm doing a conversion to fund the Roth account. I'm not making a Roth contribution. And that's important because regular Roth contributions have a special rule that says you can pull a regular Roth contribution out at any time, even before you're 59 and a half, without tax and without penalty. So if I put $7,000 into a Roth IRA as a regular contribution, I could pull that $7,000 out tomorrow. No tax, no penalty. But a Roth conversion has a 5-year rule. You can't access that money, even the converted amount, let alone the earnings, for up to 5 years. So just make sure you understand that money is not immediately accessible when you're doing a backdoor Roth IRA. Think of this as long-term wealth building. When we hit 59 and a half, we're going to access this pot of money that's been growing and is going to come out entirely tax-free. We got to satisfy the 5-year rule, so we must have it for 5 years and be 59 and a half. Once we've done that, we get that money all tax-free in retirement. Now that, my friends, is the backdoor Roth IRA. It's an incredible strategy where even high-income earners can get the benefit of Roth accounts and tax-free growth, tax-free income in retirement. Please subscribe to my channel. I've got a lot of tips on how to build retirement accounts, grow and build wealth, save taxes, protect your assets. I'm Matt Sorensen. We'll see you next time.